Social media is currently going crazy because it seems like a Bitcoin ETF has finally been approved. We're going to take a look at what that means for the wider market and risk sentiment. And on EURGBP, there's a massive technical that is screaming out currently, which is the 200 daily moving average. We're going to see where that might take the currency pair. And then the Trading Takeout today is going to be looking at the market from different perspectives when you're kind of stuck or you don't really know, what your idea on the market could be. Now, the only way you can get the best trading insights, education, and analysis each day is if you're here every day. So hit subscribe so you can get your daily trading edge. So yes, it seems like a Bitcoin ETF has been filed, the S1, which is the document needed to actually launch the ETF, has been filed by BlackRock. And Bitcoin has rallied pretty heftily off of the back of it. It's gone from about 29K to 35K on Coinbase, the spot price, just over this week. So it's had a really, really strong rally. And I'm mentioning Bitcoin because changes like this in risk sentiment, when we seem to be approaching terminal rates, do matter, especially in something that's really, really high beta like Bitcoin. High beta means that it outperforms a benchmark quite heavily. And Bitcoin, obviously, if you use the S&P 500 or even if you use the 10-year treasury yield, it way outperforms that basically over the longer term. So I'm looking at this like, okay, we're at peak rates now. This ETF has been approved. Everything's good again. I think it's probably not the exact thing to sort of deduce from this, but it can be a simplistic view of how risk sentiment might be changing when we are at peak rates. Now, the things to look out for are probably, liquidity problems building up, which I can certainly see coming from Asia, and credit problems. We've just hit a new high in automobile loan delinquencies. So people are basically defaulting on their cars. But it's important to note these things at key turning points or potential key turning points. Now, there's something a bit more specific to do with Bitcoin, and this is more to kind of work out what goes on from the regulatory side of things with these things. And this guy, Spread, he's very, very good. He clearly works at an institution or a bank or hedge fund, something like that, because I wouldn't be delving into S1s and reading all of this language, basically. They're very, very boring. But they are important because they give you really, really good information like this. So he's basically done this tweet thread. And at the end of the day, it comes down to, so what this means is we'll start from the second tweet here. Orders may be executed with the Coinbase acting as principal. So basically this means that Coinbase is allowed to trade against its own clients, basically. Any funds coming in, it's allowed to trade against them. BlackRock may front run the ETF buyers. So BlackRock can actually get in before, or they can see the orders coming in and they can get in themselves before they are processing the orders. BlackRock will also get ongoing fees from the Coinbase Prime brokerage, who won't front run their customers, which they're allowed to actually do, but they say they won't. Right. It sounds all very dodgy. And this is quite an interesting tweet here. It basically lists, everything that is there. This S1 is a list of past and potential criminal activity. And that is all an S1 is, a disclosure of potentially bad things. Word counts, fraud, malicious, crime and variations, 19, manipulation and variation, 25, failure, 39, adversely, 102, wash trading, 6, front running, 3. Basically, yeah, it seems just like an easy way to monetize longer term punters, people that are going to be very passive, but they want to be able to maximize how much they get from them every single time they buy part of the ETF. That is what it sounds like. In effect, I described it as legal FTX. But the point of this is really that we've got to read the fine print when it comes to these big changes that go on, especially in ETF land. You've got to understand the composition of these ETFs. I was in an ETF a couple of years ago called URA, and it was good. But then they rebalanced it, and it was a uranium ETF. They rebalanced it, and then a lot of the components and holdings of that ETF changed drastically to not be so concentrated in the actual uranium itself. It brought in loads of rubbish miners and manufacturers of things related to uranium, but not the actual good uranium miners itself. So really, really focus on that. And I guess the context here would be, or the similarity would be, you've got a Bitcoin ETF, so you've got the uranium ETF, and then you've got Bitcoin itself, or you've got a uranium miner. One uranium miner is probably closer related to Bitcoin in this case than the Bitcoin ETF might be related to Bitcoin itself, if that makes sense, or the risks at least. But yeah, this is just a lesson on really focusing in on fine print, understand exactly what product you're looking at, what the components of said ETF are, and then go from there. So, Euro pound, I usually take, quite a broad macro view on things, and there is a macro backing for looking at this in this way. But I decided just to throw on some technicals. And I decided to, just create this little range where there's a previous low, previous shorter term high on the range, and then add in a 200 daily moving average. Because I really like the 200 daily moving average. It's quite objective. And it allows you to view potentially where trend changes are or have occurred. And what can we see right now? Well, the pair's resting right at the 200 daily moving average. It's using it as support. And we've already traded well above it. And now whenever usually the market's still above and looking to test it as support, we tend to get a bit of bullishness. And you can see, even if you were to draw a little trend line here, there's a trend line there too. So we're reaching this kind of area of confluence. We've got this horizontal support as well. But I guess from a sentiment perspective, risk is very, very strong at the moment. We just spoke about the Bitcoin ETF. Equities aren't doing as well, but if the dollar sells off more through this week, they potentially could do. And I think, in terms of where we are headed for euro pound, I actually think that the euro is going to strengthen versus the pound for quite a while. And I say that because I really think that there is the potential for the requirement for the pound to drop lower to stimulate quicker. There's a lot of stickiness in the Eurozone, which means that the ECB can't be as flexible. They can't be as flexible as the Bank of England, obviously, because they're made up of multiple different economies. Now, this would mean that it might take them a little bit longer to allow the euro to depreciate or devalue it even than it would take the BOE to stimulate growth again. So that is one of the big factors in my mind over the next couple of months if things start to go awry. But the UK data this morning was very, very strong. We had very good jobs data this morning, and they're going to provide a revised number as well. And the revisions have been all over the place recently, but the initial data point was good. And I think this is where we're seeing the strength. We're seeing that the market is basically fighting Andrew Bailey's comments from last week, where he said that there might be a marked fall in inflation because unemployment is slightly lower again. So a tighter labour market, means that inflation could tick higher. It releases that kind of elastic band and allows inflation to move higher potentially. So, that's probably why it's selling off at the moment. I do think the 200 daily moving average could be very key here. If we do start to tick down here, it's probably an invalidation of the idea. But for now, I'd happily say bullish for a while. So today's trading takeout is basically when you're stuck in markets and you can't really generate an idea. Don't force it. But if you think that something isn't really working at the time, just take a different perspective, whether that's, going from being very macro focused and moving over to technicals, or going the other way, or just looking at something that might be a bit different, writing stuff down, doing something that you don't normally do to rewire how your brain's working. And the content that you consume shouldn't always be the same. It shouldn't always be from the same people, because then you get stuck in thinking that, you're just doing the same thing as everyone else. You need to try and find different ideas as the market context changes. And it's basically like a research job. 90% of what you do should be research and trying to understand and piece together how people are thinking differently about the market, because that is all the market is. It's just different thoughts being acted on. Of course, algorithms can't think, but they are programmed by humans who can think, and algorithms don't need to think because they're operating on such tiny time scales. But when we're talking about how different participants are acting, we are thinking of how humans are reacting. And so this means that everything in the market is psychological, and understanding the motivations of different participants is absolutely vital, and it changes all the time.